quite like this short, but it hasn't developed yet ahead of Powell. The markets are a bit too relaxed for my liking. Now, this was obviously in line with a conversation we were having with the guys this morning in London. You might recall that conversation, guys. We had a little chat this morning about Powell, and I said, I have a different opinion from the market makers. My opinion is that they're a little bit too relaxed, which is why we used the word again. I think the markets are seeing this as a definite neutral kind of trade. I'm thinking of this as being hawkish neutral. Is that exactly what we said this morning, guys? This morning, not this afternoon, not after Powell. We said this morning. I'm seeing the market as hawkish. And as a result, I'm thinking short the Forex markets. Remember that? I says, for me personally, it's short bonds, short the market against the dollar, short the S&P, not long the S&P. Again, that's exactly what we said this morning. Short the pound, short the euro, short the bonds, short the S&P. But that's not what the dealers were saying. The dealers had a different opinion to what we had, and that's why there was this discussion taking place this morning in class, in the London session. You know, and you can see that we had this idea here of selling. Sold this top line 3 times now at that stage. You can see I'm not giving up on my sell. And again, we come up to the next one. And again, I said sold again into the level 2. That was at 147. And I said here at 154, take a look at what I said here. Bonds, the failed auction keeps me offered, but at higher prices. If they keep taking me there, I will play along gladly. Now, that could have went right back in my face, right? Because that's one of those comments that seems a little bit smug, a little bit, look at me, I can sell anywhere and I'm going to make money here. But we were right. It wasn't smug at all. It was just the fact that that's what the value said we should be doing. And that phase there where I said, I'm going to keep playing along gladly every time they give us a higher price, was actually this area here. That's the trade I'm talking about right there. If you look at the time, it was 154. 154 is this point in the charts here. So you can obviously start recognizing that that's exactly what I'm talking about at that stage. If they want to keep playing this game, they found a willing participant, in other words, right? Maybe it doesn't sound quite so smug when I put it that way, but they found a willing participant to take the other side of this trade. I'm willing to sell to them at higher prices. If they want to give me a higher price, I'll take it. I'll take whatever they've got, basically. Turns out I was right, and they were wrong. The price obviously came off 136 halves, traded down 135s, and obviously from the highest high down to 134s, 135s, down into the 134s. It was nearly a $2,000 sell-off. Nearly a $2,000 sell-off. So we were right. So that smugness paid off. I mean, it's, sometimes you can look at it and say, well, surely the idea is if that's what the market's telling you, you should pay heed to that. And I was paying heed to that. I wasn't selling at lower prices, right? What I was saying was quite clear. It's keeping me offered, but at higher prices. I'm acknowledging that there's a disagreement. I'm acknowledging that the market isn't giving me what I thought it was. And I said that to you guys in the room this morning. The market just isn't doing what I thought it should be doing. And obviously, based on the market not doing what I thought it should be doing, I'm a little bit more cautious about this whole play. I'm being very, very mindful of the fact that it seems on the face of it that I'm wrong in that trade, but I can't see where I'm wrong. So I'm still happy to sell it, but give me a higher price and I'll gladly play along. So it's not as smug as it might come across in the tweet. It's basically saying I like the trade, but if you guys think it's bullish, give me a higher price and I will sell to you, which is exactly what we did. We sold into that trade, into the top edges, and we sold a good dozen times up here. And when the data comes out, when the knowledge comes out, when the information is now factored in, we've got a good solid $1,500 to $2,000 sell-off, and that is absolutely spot on. Turned out to be a great trade. Talking of great trades, how did that short sell on oil do? Pretty good. We actually smashed our target. We had a target, remember, of $79, but I did say in the room this morning that potentially we could have had a target of $78.50. Did we not say that this morning? $78.50? Because we were asked the question about the valuation. I think Ian asked the question about how we came up with $79. And we did a little classroom on valuations. And I said that we could be trading $78.50 today. Not even $79. I think we could be trading $78.50. Well, it's traded now at $78.60, 60s. So that top edge sell at $81, now down at $78.70 for $2,300 of sell side profits from that little bit of business, which is pretty damn good, if you ask me. Pretty damn good. So it's amazing when you value the markets, and you can see that we're valuing this market incredibly accurately. I mean, when we talk about the oil trades, I mean, we're so far ahead of Goldman Sachs, it's unbelievable in terms of the pricing. They said $100 a barrel. We said $77.20. 24 hours later, it was trading $77.20. They said $100 a barrel. We said $79. 24 hours later, it was trading $79. So everything we get a valuation, we're absolutely spot on in that short-term window. They're buying themselves whacking amounts of time, and therefore they can be right and wrong at the same time, can't they? They can be wrong in the short term 1,000 times, so long as eventually it goes up. Is all they're concerned about. Well, that's no use as a trader. That's no use to us as traders. We've got to know what's going to happen next. We've got to know what's going to happen in the short term, because we don't have endless bottoms of cash to throw at the marketplace like Goldman Sachs do. We want to make sure we're in at the right time and we're out at the right time, making the most of each move, trying to capture as big a swing as we can possibly capture when these trades take place. And obviously, as I said, we'd given a valuation of $78.50 to the guys in the room this morning, following the question that Ian asked about how did we come up with a $79 valuation on our oil from last night. And we were spot on perfect. Helped along its way, of course, by this little fella here with the big drop on the dollar trade. That turned out to be obviously the big reason why, but that was part of the factoring in process. Remember, I'm not looking at oil in isolation. I'm looking at oil in relation to what my overall view of the market is, which, as you know, I was very against the shape of the markets. I was very against what the dealers were suggesting for the markets. I thought it was particularly bad pricing. Personally, I thought it was particularly bad pricing. I said that to you guys in the room. What did I say? I said if it was me, I would price the downside at 35, not at 20. Is that exactly what I said? Sure. So I would have pretty much almost doubled the pricing of the downside on the S&P, wouldn't I? That's exactly what I said. So I'd have priced the S&P double the size that the dealers were pricing. And I said 35 this morning, the pricing was 20. So it's nearly double the size. And I would have been absolutely correct in that assessment of double the size, wouldn't we? Crazy accurate, guys. Crazy accurate. If you just get into the process and you work the trades and work the ideas. Yeah, not a lot you can get wrong in that sense, guys. Not a lot you can get wrong. Anyway, our momentum sell on sterling. We sold it this morning at 20.50. 20.50, guys. And there hasn't been a buy trade yet. It's currently trading at 18.70. So our short sell on sterling with the momentum, 20.50, and then again at 20.40s, is now trading at 18.70. So in other words, 180 pips lower. 180 pips lower on our short sell on sterling today, guys. From our classroom trade, the London Open, and it was a sell side only trade, as we shouted, and that has obviously just annihilated any downside. Annihilated any downside on that bit of business. Pretty good trade, sure. Sell side only. We'll obviously touch on that in classroom in just 5 minutes to just go through some of these little trades, and then we'll get into an exercise of pricing up the markets, guys. And that's all in 5-10 minutes.